Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. This morning we'll be taking a look at exciting stock market news, a bunch of notable earnings reports, and the morning's biggest gainers and losers. Just before we get into that, I want to thank you all for your patience with me and my sound issues this week. I'm working with a new filming setup and just working out a few bugs, but I promise they'll be resolved soon. If you enjoyed today's video, make sure you hit that thumbs up button and that you subscribe to the channel as well. Okay, let's get right into this morning's exciting stock market news. U.S. stock futures are mixed this morning. Currently, Dow futures are up 0.07%, while S&P 500 futures are down 0.17%, and NASDAQ futures down 0.29%. Meta Platforms has launched a bunch of new features for their Messenger app, including a split payment feature. That feature will let users share the cost of bills and expenses. The app has also rolled out additional audio features, now allowing users to make voice message recordings of up to 30 minutes long. Messenger has also introduced a feature allowing users to send messages that disappear once seen. The feature is called Vanish Mode. The Facebook stock is currently rated a moderate buy with an average upside of 43%. Shares of Chinese tech giant Alibaba were on the rise after their biggest shareholder, SoftBank Group, denied speculation of a stock sale. On Monday, a Citi analyst speculated that SoftBank may sell its stake in the Baba stock, following which their shares dropped 6% on the New York Stock Exchange. The speculation followed an F6 filed by Alibaba on February 4th with the SEC, which disclosed the registration of 1 billion additional ADS. According to Bloomberg, in a private post-result briefing with analysts on Tuesday, SoftBank executives clearly denied the speculation and said they had nothing to do with the registration filing. The Alibaba stock is currently rated a strong buy with an average upside of 49%. Waste disposal company Republic Services has signed an agreement to acquire environmental solutions provider US Ecology in a deal worth $2.2 billion in cash. Based out of Idaho, US Ecology offers solutions for the treatment, recycling, and disposal of hazardous, non-hazardous, and specialty waste. Republic Services anticipates the acquisition to boost its adjusted earnings and free cash flow immediately, and also expects to record cost synergies of around $40 million within 3 years of the acquisition. The Republic Services stock is currently rated a strong buy with an average upside of over 13%. And shares of Chinese electric vehicle maker XPeng were up over 9% following the news of their inclusion in the Shenzhen Hong Kong Stock Connect program. The Stock Connect program is a collaboration between the Hong Kong, Shanghai, and Shenzhen stock exchanges, which enable both international and mainland Chinese investors to trade in each other's markets. The program increases the investor base of the companies included in the program. Inter-exchange trading is subject to certain daily quotas and can be done through the clearing and trading facilities of participating exchanges. XPeng is one of the first smart EV companies on the HKEX to be included in the program, and it was also one of its kind to achieve dual primary listing status on both the New York Stock Exchange and HKEX. The stock is currently rated a strong buy with an average upside of 45%. Now moving over to notable earnings reports. In the pre-market this morning, we'll be hearing from big names like Twitter, AstraZeneca, and Coca-Cola. And in the after hours today, we'll be hearing from Affirm Holdings, Aurora Cannabis, Cloudflare, Zillow Group, and Upwork. In the pre-market already, we heard from Pepsi Co. They delivered better than expected results for their fourth quarter, but weaker than expected guidance for fiscal 2022. Earnings per share came in at $1.53 versus the $1.52 expected, with revenues of $25.25 billion versus $24.24 billion expected. The food and beverage giant said it's feeling the impact of inflation as the price of cooking oil, packaging, and transportation rise. Their stock is currently rated a moderate buy with an average upside just shy of 4%. Yesterday, we heard from Walt Disney, who announced record revenues. Revenue in the quarter was up 34% year over year to $21.82 billion, beating the estimates of $18.78 billion. Disney parks, experiences, and products registered a 100% revenue increase to $7.23 billion. Their diluted earnings per share increased to $1.06 from 32 cents in the same quarter last year, easily beating the analyst estimates of 64 cents per share. The Walt Disney stock is currently rated a strong buy with an average upside of nearly 33%. Also delivering strong quarterly results was Uber Technologies. Uber's gross bookings rose 51% year-over-year to $25.9 billion. They reported diluted earnings of 44 cents per share, higher than the analyst estimated loss of 35 cents per share. Moreover, their quarterly revenue jumped 83% year-over-year to $5.78 billion, also surpassing the street's estimates of $5.34 billion. The Uber stock is currently rated a strong buy with an average upside of 63%. And also coming in ahead of analyst expectations was MGM Resorts. They delivered record fourth quarter results following the reopening of the economy, removal of mandated operational and capacity restrictions, coupled with a boost in travel. They reported quarterly net revenues of $3.06 billion, exploding 105% compared to the prior year. Their adjusted earnings came in at 12 cents per share when analysts had estimated a loss of 3 cents. The MGM stock is rated a moderate buy with an average upside of 19%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Twilio. Their stock is up following a major revenue beat and bold quarterly guidance. Under the ticker TWLO, their stock is currently up 20%. They're followed by Adapt Health under the ticker AHCO. Their stock is up nearly 19% following the filing of a Form SC13G with the SEC, which is the Statement of Acquisition of Beneficial Ownership by Individuals. And the Datadog stock under the ticker DDOG, the stock is up over 14% following their quarterly earnings results. Our biggest losers this morning are led by Vimeo. They did beat expectations on their earnings report, but did forecast slower revenue growth. Under the ticker VMEO, the stock is currently down 23.5%. They're followed by CGen under the ticker SGEN. Their stock is down 16.5%. They did beat on their revenue, but had guidance below expectations. And Lumen Technologies under the ticker LUMN, the stock is down 11% following mixed fourth quarter results. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always appreciate hearing from you guys. Thank you all so much for watching. I hope you have a fantastic day, and I'll see you back here next time.